All right, it's recording now. I'm gonna share my screen. Where is it? This screen. Yeah. Yeah, can you see this?
Yes.
Right. So this is the SPX. Do you have any idea what happened? Do you have any idea why we got this drop? Because I've been trying to find out, like, what's the reason for this?
I I thought it's because of the news.
Yeah, which particular news? Because I found two reasons. I don't know, maybe it's one of the two or a combination of both. It seems to me that since people are scared of, well, I can explain technically, because if you look at the chart, you can see all the signs that this was going to go down, but it's not the technicals that drive price. So it has to be something more fundamental that caused it to go down. So that I don't know what that thing is, because what I'm trying to understand now is this just a small correction, or is this the start of something bigger, something that will go down like that? So this is why it's important to know what is the reason for this very sharp sell-off in one day. In one day. I have no idea. I was trying to find out. I think, okay, the first one I found was coronavirus. There's this, a lot of people think there's wave 2 going on. But I'm not so sure it's wave 2, because if you look at what's happening, the states that are seeing an increase in infections are the states that had the lowest, or the states that were not really affected previously.
Previously, exactly.
Because previously it was New York, New Jersey, Washington State, and California.
California, yeah.
Yeah. So those ones are just opening up now. But the other ones that are now seeing increases in infections and hospitalizations are Texas, Florida, Arizona.
Yes.
And hold on, I'm getting a
incoming call from 07538
getting a phone call.
368471 for Oluwatosin Israel tow code.
I don't know who's calling me. Yeah, so
incoming call from 07538
I need to shut this off.
368471 for Oluwatosin Israel tow code.
Right. My phone is linked to Alexa.
Yeah.
So Arizona, Texas, Florida,
California
again. Okay, so California might be wave 2, or maybe it's just a continuation of wave 1. Who knows? But it looks like wave 1. So these states are lagging the other states, or they reopen too early. Maybe, who knows? So the question now is that a reason? It could be part of the reason. Maybe people are taking profits because they're scared. The other reason could be, there was a FOMC meeting on Wednesday. That's the Federal Reserve.
Yeah, the Fed. Yes, I think I listened to that.
You watched that thing?
Yeah, I watched the announcement.
My God, how can you watch that?
No, I was listening to the news when they switched over to the announcement, so I just like
okay, all right. I can't watch it.
But in the news, there was nothing really, like, they didn't do anything different. So I was now like,
oh, I actually think that's the significant reason. It's the things, the market is so sensitive.
Yeah.
there are some little things the Fed chairman might say, and you will just see the way traders will react. It will be so out of proportion to what was said. But what he said was that the Fed will be tapering their QE activities in the market. So what that means is the amount of, let's call it money printing, will be reduced. Basically, that's the summary. So when the market was falling in March, it fell to this point. Then the Fed jumped in here and they pushed it all the way up here. And they said, okay, we have supported the market to a reasonable level. We're now going to reduce the amount that we're pumping in. I think they were adding about 1 trillion a month or something like that. Something ridiculous. I know the amount was just
just printing free money and just
it was, as I hope I'm not exaggerating, but I think it's around 1 trillion like a month or so, maybe 2 months, who knows. And now they're saying we're going to reduce that amount to about maybe 1 trillion a year. Okay, so that's what was said, and the reaction was, oh, the Fed is not going to support the market as it was supporting in the past. And then you had this sell-off. So it could be just that announcement, or that announcement and coronavirus fears, maybe both of them together. It's probably one of those two. So if it is coronavirus, it's only going to get worse. Then this might be something bigger. If it is because of the Fed's announcement that they will be reducing the amount of stimulus, the market is already here. Okay, so if the Fed stops pumping in liquidity, it shouldn't crash like that. It's not like they are stopping entirely, they're just reducing it.
Yeah.
So maybe it will correct for a while, go down, and then go back up. That's what I'm looking at. That's what I'm thinking. So that's the fundamentals. Maybe, I really don't know. We have to wait and see. But I just hope it's not something big, something that will make it to go down to this level. That's gonna be serious. That's gonna be serious, because I am just beginning to start buying.
Oh dear.
Yeah, so it will not be very nice if it just goes down again. But it's very unlikely.
Yeah.
It's very unlikely. But if you look at it from a technical standpoint, man, it's a mixture of signals. So first of all, if you analyze, this is the weekly chart. If you do some candlestick analysis, this is not looking good, because if you see this red candle, we have this uptrend here.
Okay.
And then we get this large bearish candle. So this candle, you will notice its overall length is longer than this green candle's length. So it engulfs this candle. That's a bearish engulfing. So what that signifies is you have this uptrend, gets here, we might get a doji, which is indecision, and then next thing you know, it comes down. So it usually signifies reversal or continuation. It can be both. It can be one of the two, but nobody knows. So this is looking bearish. So maybe next week we go down, 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 down. You never know. You never know. That's the weekly. The weekly doesn't look good. But if you use Ichimoku, it doesn't look bad. because
Okay.
if you use this cloud as the support, it looks like we're going to bounce off that cloud and head upwards. But you never can tell.
You never know.
Yeah, so this, where's this? This is the base, no, this is the conversion line. This is the baseline. Let me adjust this, make it thicker than that. Okay, yeah, so we're bouncing off the conversion line and the cloud. So that doesn't look bad. It looks like we're on support. And if I take off this Ichimoku and I draw a support and resistance line, you see something interesting there. Yeah, see? So let me take this one off. That looks very, very interesting. So this is an established support and resistance zone. So back in 2019, price tried to break above this. It was resistance, it failed. So it pulled back, tried again, pulled back, then it broke through. And then during the sell-off, came down here. We tried to go back up. This became resistance. You can see it failed here and then sold off. And then we went back up. So on the way up, this became resistance again.
Resistance, yeah.
Well, not really resistance because the next day it went up, but it stopped here for a while. Then it went up. And then this week we've bounced, or it has provided some support. So what's going to happen next week? Is it going to bounce and go back up, or is it just going to collapse? That'll be interesting to watch. And if you use support and resistance again on the daily chart, you see something interesting. This, I'm just going to copy this. No, didn't get that. Yeah. This is a support zone. It's funny how it seems price is just, taking decisions at these different important levels. Yeah, so when we broke through this resistance line, price went up and then there was a pullback, bounced, and it got stuck here. Then it goes up, breaks out, and then it tries to pull back, bounced off that line, and then it goes up, and then even on the way down, that area was significant. Again. So on the way down, breaks all the way down, bottomed, recovery, and then on our way back up, we pulled back at that exact position. Sorry, that exact line again, which is interesting. So this could be a very important zone. Let me draw a rectangle. This area here could become a very important area. I'm suspecting we might begin to, consolidate here, and then something might happen. Maybe form a wedge, form a rising wedge like that, and then down. This is a rising wedge. Or we could form a bear flag like that and collapse. Who knows? This area looks interesting. And you notice this, last week I was making these projections using wave analysis. Do you remember?
Yeah, I do.
Yeah, I was trying to project where this wave, okay, let's say this is wave, where are those waves? I think this was wave 1, 2, 3, 4, 5, 6, 7, 8. Yeah, this was wave
So
2. So we're trying to project where wave 3 will end.
3. Oh.
Yeah. And I used that calculation, projected it to this pink line. And right, that's TD sequential. We were on candle 6.
Oh, that last week.
Yeah, candle 6. And I was saying we need about 3 more candles to get a 9 cell setup. And that's the 9. But this is not a perfect 9. You'll notice this 9 has a white triangle or gray triangle. The perfect 9s have red. So why is your TD sequential not showing this 9?
Yeah, I was surprised too.
Which one are you using?
Like I was saying just 8 before that drop down.
You were seeing 8, so yours is on 8.
Yeah, mine got to 8.
So this candle here is candle 8.
Yes.
And this, you're using, I still don't know why. I think maybe you're looking at a different SPX.
Oh,
that's one reason.
That be the reason. Yeah.
See, if I go to
my SPS is not Oanda.
Okay, which one are you using?
XPX.
SPX 500 TVC 8. That's it.
Yeah, that's it. That's
yeah. So the data should be as close as possible, but they're not exactly the same.
Okay.
If I go to the futures market, ES. So this is S&P futures market. Yes. So TVC. All right, I get it now. TVC is using the futures market. Oanda is using the spot market.
Okay, what's the difference?
Futures market is, they're trading futures contracts.
Okay.
So the spot market is tracking the exact price of that, let's say it's a commodity. Let's say it's gold. So you have the spot price of gold, the actual price right now.
Okay,
that's the spot price. Let's say you wanted to buy gold, how much is it? That's the spot price.
Okay.
Futures market is based on contracts that all these traders enter into based on their
future
projections of price. Yeah.
Okay.
So it's the same thing with the index. You have the index is tracking, this S&P 500 index is tracking the performance of 500 stocks in the US. Okay, so that raw performance is the spot price.
Okay.
Now the futures traders are now making bets based on future projections of that spot price.
Of that, okay.
That's the futures market. That's the best explanation I can give. So Oanda is tracking or showing you values of the spot market. TVC, the one you're using, SPX, I think they're using the futures market. So the TD sequential will vary slightly.
Okay.
And the different people write the code for this indicator. So there are slight variations. So this one I'm using, you'll see here, it says modify TD sequential.
Okay.
There are some
that's the one I use as well, the modified.
Oh, this one. All right, okay.
Yeah.
And there are lots of them. There's so many. If you search here, if you just type TD sequential, There's so many. So different people write the code. I don't know what they put in their code. So, so some people might make slight adjustments. So the counts will be different.
Yeah.
Yeah, there's so many of them. So many. That's the difference. Go back to SPX USD. No. Yeah, this is the one I use.
Okay.
No wonder.
No, this one looks better.
Right. So it's just very interesting to see that 9 candle appear on that day, and then the next day you have this huge sell-off, and that is happening exactly at that resistance zone, which is close to that projection line. But the funny thing is, according to that wave analysis, wave 3 has to be 21 candles, and this is less. This, I believe, is less than 21 candles. That's 18. So that highest close should be at least 21 candles. So if you're a very religious follower of wave analysis, you'll be expecting this, to go back up, make a new high, and then you get your 21 candles. Then wave 4 can begin. You get that? Because right now, this cannot be wave 3. So if we fall lower than this low, then this is the funny part of wave analysis. Then this is no longer wave 2. Wave 1 will now have to, because this high close is higher than this, wave 1 will now have to extend all to this point, and then this will be wave 2, which is very annoying. So that's one possibility. The other is for this index to begin to consolidate here and then make its way back up, and then this becomes wave 3. Then you expect wave 4. But the best way to go about this is to use a combination of different indicators or analysis. So if this wants to go lower, fine. If it wants to consolidate, okay. I'll just wait to see what's going to do next week. So we're going to start having a count. Okay, we've already started having a countdown. So this is going to count down using TD sequential now. We're going to have a countdown to 13. No, not 13. So this is a price. So with this TD sequential, you have a price flip, then you have a setup, then you have a countdown. Okay, so this is the price flip. Then we had the setup. The countdown should have continued, but we didn't get there because we sold off. So a new
how does the price flip work?
The price flip occurs when you have a close. Well, depending on the type of flip, it could be a bearish price flip or a bullish price flip. So we already have one now. I'll show you. Let me delete that. So you need to have a candle close that is, okay, this is a bullish price flip. So we need to have a candle close that is higher than the close of the candles 4 periods prior. So this candle, let's use this candle close here. 1, 2, 3, 4. Okay, that's not a price flip. This is not a price flip. Hold on. 1, 2, 3, 4. Oh yes, this is a price flip. Let me move it here. So look at this candle.
Yeah.
Look, count 4 periods prior. This is 1, 2, 3, 4. So this 1, 2, 3, 4. This candle closed here because it's a bearish candle. So it opened up here, closed down here. This candle here opened down here, closed
there. Okay.
up here. So this, we were coming down this way, and then the price got flipped like that.
Okay.
So this becomes candle 1. So that's the prerequisite for a setup.
Okay.
So you have the price flip. Then you get, so this first count was interrupted. We had a consolidation here, and then price flip. So this became number 1. And then we got a countdown to 9. And then we have a countdown to 13, which begins on this 9. So this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So that's how it works.
Okay.
Price flip, then you have a setup, then you have a countdown. So this is now going to represent a new price flip. So this is a bearish price flip because it's going down. And this candle, this is the close of this candle. It has to be lower than the close 1, 2, 3, 4. So this close is here. So that meets the conditions for a price flip. So this candle becomes candle number 1. The 1 is very faint. I don't know if you can see it there. It's very faint.
Yeah, I can see it.
Yeah. So now we're going to start a new countdown to 9. After 9, if it doesn't pause or reverse, we get a countdown to 13. Get a countdown to 13. So that's what I'm watching now. Don't know what's going to happen. We might get a 9. We might get a reversal. We might get a 13. Who knows? Who knows? Let me turn on Ichimoku here. So on Ichimoku, this is bouncing off the baseline. It's very funny how we keep bouncing or stopping on all these important lines. Let me turn this off. Let me use this. No, that's not clear. It's something clear. Yellow, no, not yellow. White. Right, so make it dip. Right, you see, this is what I'm trying to highlight.
Okay.
Turn this off. Okay, this support is here. We know this support is here. I'll hide it. See how we're bouncing off the 200-day. As a 200-day moving average. Okay, price is supported there. Price is also supported by the baseline. If you go to the weekly, price is bouncing off the cloud. So and don't forget this this horizontal support here. Just how strong is that zone? Because there's a cluster of supports there. How strong is that? Or will the fundamentals just make a mockery of that support area? You never know. Whichever one is the strongest will prevail. But that's a 200-day moving average. It's very, very, a lot of traders watch that moving average. A lot of them watch it. So we've spent 2 days on that moving average now. And we're still above this cloud on the daily chart. So we're still bullish overall. It's not even in bearish territory yet. And then if you bring in the RSI, we have just turned downwards. So RSI is currently 57. So there's no need to start selling here.
Okay.
Well, I wouldn't sell because if you just sell, you just take losses and the thing might just turn back upwards.
Yeah.
Very, very annoying.
Yeah, very annoying. Like funny enough, last week I bought some, like, took some positions, but I think for some reason I set like stop loss. It didn't just threw
All
me out
right.
of the market. I was like, oh my god.
Yeah, if for trading, like trading currencies, commodities, I would put, well, it's good to use stop loss. I'll use stop loss for those ones. But for S&P, when I know the Fed will jump in to save the market,
Yeah.
I will have a very wide stop loss.
Okay.
Very wide. Very wide. You know, I know people who held all the way from here down here. They didn't sell. They just held it. And they were deep in red, like minus
I can
15,
imagine.
minus 20. They just held it. But once the Fed jumps in, as long as there's no leverage, I think those positions will not, you can't lose all your money. Even if you opened here, if you enter the long position here, no leverage, this decline here, this was less than 50, right? It should be less than 50.
Like 30 something, I think.
It should be less than 50.
Yeah. Yes.
No. Let me use Fibonacci. It should be less than 50. What's the best way to do this? No, I'm doing it wrong. It should be less than 50. Yeah, 34.
Yeah, I know it's 30 something, yeah.
Yeah, 34. So if you had held through all of that, those positions would have almost become green now. Yeah, but not everybody can do it. Not everybody.
Yeah.
Not everybody can do that. So for things like this, I'll just hold the positions. It's actually very annoying because by the time we were here, I was thinking there will be a pullback. The pullback did not come. So once we got here, I said, you know what? Let me just jump in. So I bought here at the top. And then we got this.
All of a sudden,
Yeah,
just...
the wrong day.
Yeah.
So there's no way I would sell now. Just wouldn't make sense.
Yeah, there's no point selling.
I don't see price coming down here. And even if it does, then all what the Fed did over the past 3 months is a waste. It's a waste. All that money, all that propping up of the market, they just wasted their time. So they have to come back. They have to come back in and support it. So if I was for SPY positions, I'll just hold it. But for Bitcoin, Bitcoin can go down to 3,000. You never know.
Yeah.
For currencies go up, down, up, down. You never know how far up or down they'll go. I will just use stop loss for that. So as long as, but for me, this is what I'm watching. I'm watching this RSI. I'll begin to get worried when it gets to 40. Once it gets to 40, I'll be worried. I'm suspecting RSI getting to 40 will coincide with price breaking below this cloud or price falling inside this cloud. That's what I'm suspecting. If you look here, something similar happened. No, turn this off. So when we got to the top here, price began to turn downwards. So this candle was RSI of 46. So by the time we got here, we broke beneath the cloud, RSI was 31. So I'm using that same scenario here. So right now RSI is 57, almost 60. By the time this candle, depending on how rapid the decline is, by the time this candle gets into the cloud and out, RSI should be at 40. Then there's trouble. And there's trouble. It could be a very long downtrend.
Yeah.
That's what I'm looking at. But for now, we're above the cloud. It looks like a routine correction, and price is currently resting on a cluster of supports. So we just have to wait and see what next week will look like.
Yeah.
Yeah, I just have to wait. And for Bitcoin, Bitcoin is not doing anything.
Yeah, it's just within that is zone. Exactly. That zone is just there. Like nothing really is happening.
Nothing is happening, man.
Yeah, nothing is happening.
Everything I looked at last week looks intact. See, this is the weekly chart. That's the broadening descending wedge. We're still at that trend line. And if you go to the daily, we're still inside that yellow channel.
Yes, we're still within that channel.
There's nothing happening. And for now, RSI is at 48. Yeah. I'm also thinking by the time this price gets to this trend line here, RSI should be breaking 40. So if price breaks out to the downside here, then it could be a sign that we're going down.
Yeah, we're going down.
At that stage, RSI should have fallen below 40. Below 40. So that's what I'm looking at for Bitcoin. But for now, it's just consolidating.
Yeah.
And if you use TD sequential, you'll see that there's really no trend. You can't get a 9. Every time the count begins, it gets interrupted. So you can't really get 1 to 9. We have a 13 candle here, 13 sequential, sell setup. And then we got this big bearish candle. So we've got a pullback, but are we going to resume the uptrend or will we continue down? Who knows? There's really nothing in Bitcoin. You just have to wait.
Yeah, you just have to wait and yeah, it plays out.
Waiting can be very, very frustrating. Very frustrating. And for this SPX, was it last week? No, it wasn't last. Okay, last week I was expecting us to, no, this was 2 weeks ago. I was expecting the sell-off to come down to this TD setup trend. This week, we actually sold off to this one. It's just coming out there. You see the first line there. So that's another support. That's like how many supports now? Almost 5. Almost 5. So is that support going to hold? That's what I want to see next week. If it doesn't hold, maybe we come down here, which is this one. And all these lines, they're not just supports isolated to the TD sequential. They actually coincide with support and resistance areas.
Okay.
You'll notice this one is here. Hold on. This one is here. This one is somewhere here. That's like a small support zone there. Because when price broke up or broke out to the upside here, it began to find support here. So it bounced off this line here, pulled back, bounced, and then went up. So that same area is where I'm looking at as the secondary support for any sell-off. So if we have come down here, we've found support here. If we now break out again to the downside, maybe this zone, maybe this area. So here it became resistance, and then it became support, maybe again here. If we get there, I'll just buy.
Yeah.
Yeah, that's what I was doing. I'll just buy more.
Yeah.
I'll buy more because it's very funny how you can say, oh, I'm going to wait. We might go lower. And then before you know what's happening, you just see price begins to go up.
Go up again. And I'm like, oh.
And before you get the boldness to jump in, we have passed this high.
Yes. So yeah, exactly.
It's funny how that happens. It happens all the time. All the time. All the time.
Interesting.
And look at this again. I just turned on Ichimoku. That area is
that green
the cloud.
Which is a good sign for support as well.
Yeah, let me try something else now. I'm going to try Fibonacci. No, not this. I'll try Fibonacci retracement. Let me see. From here to here. No, that's not what I'm looking for. So using Fibonacci retracement. I'll make it bold. Nope.
No.
Back. Yes. So that area is the 38% Fibonacci level of this entire uptrend. This is a 38% Fibonacci, this one here.
Yeah.
So that's another significant thing to look at.
Level.
Yeah, 38%. And this is what a lot of traders, including those institutional guys, are looking at. Okay, by how much are we retracing? 38%. All right, that's a good level to jump in. Take it up. Or we might go further down to 50. So that will be 50% of this entire
movement.
Cross 61, then okay, that's trouble. Because after 61, there's really nothing to hold it here.
Yeah.
It's all the way down to 100% retracement. So that's SPX and Bitcoin. That's all it's funny, NASDAQ is doing so well.
That's it.
If you put it on NASDAQ and a NAS 100, it's a crazy chart.
Wow.
Crazy. Look at this. It only pulled back by, what's the percentage? Can't see it. Hold on. Do I turn this on? Symbol, name and label, no. Is it this? Last value. Oh, I can't remember how to turn it on. Anyway, NASDAQ was that's about, I don't know. It was less than SPX. I think so. I think it was less.
Yeah, I think it looks less.
Oh no, you can't use the size to judge because of the scale.
Yeah, it's true.
Yeah. There's a way to turn this thing on. I used to have it on there. Status line, bar change values. That's it. All right. So this is 4.58%. This is 5.3. Yep. Nasdaq was less. But that uptrend looks very solid.
Yeah, for Nasdaq.
Hardly any break or pause in between.
And it went to even all-time high, like.
Oh yes, of course. See, that was the previous one. But usually in the past, Nasdaq used to the gains used to be higher than SPX, and then the sell-off used to be greater than SPX. You know, when it sells off by a greater amount. So if SPX sells off like 5.3%, Nasdaq will do maybe 6 or 7%. But I think a lot of people are just piling into tech stocks. I can even check that. Let me see. Tech. Tech stocks, 1 week performance. Yeah. Past week, tech was the highest performer. XLK. Year to date,
It's
tech. Yes, still tech. So technology, then communications. Then that's consumer discretionary.
Okay.
Yeah, so these are the different sectors within the S&P.
Okay.
So I think even this rally in S&P is driven mostly by tech.
Yeah.
It's driven by tech. Although recently, small caps were actually doing very well. Yeah, this is small cap outperformance, outperforming the S&P index. But tech in general has been the best performer. We're doing so well. So it didn't even give enough of a dip for me to buy. I don't even trade it anymore. I prefer to focus on S&P, but that's not even a large dip like this one. This one, wow. You can buy from here. Watch it go up. Watch it go up. Yeah, that's what I'm looking at for next week. I just want to see what's going to happen. Will this support here, will it hold? Will it collapse? If it does, are we going to stop here? And then will this one hold? If this one breaks, okay, big problem.
Yeah.
So those are the levels to watch.
Okay.
Right, that's it. I'm trying to trade only Bitcoin and SPX. It's easier when you are only focused on two or very few assets.
Asset, yeah, exactly.
I used to trade stocks, man. There were just so many things to look at. So many. I prefer to just focus on this two.
Yeah, I think it's just last week I tried the SPS, but the thing caught me off. So I was like, okay, let me just watch and see. But from this analysis now, I'm just going to watch how it plays out next week.
Yeah, I think these two levels. I am hoping for consolidation here.
Okay.
Well, not consolidation this way, but maybe into a wedge or not rising wedge, into a falling wedge, something like that. And the best way to see that would be on the 4-hour chart. So usually this pattern like that will break out
Yeah,
to the upside.
to the upside.
Yeah. That's what I'm hoping to see. And maybe we have actually started. No. Maybe, let me delete this. Maybe this is the start of a wedge. Like this, down, go back up, and we might just keep building on this. Who knows? Yeah. Let's just wait and see. Yeah. That's the best outcome to hope for. You want to see some sort of structure here. You don't want to just see straight candles going down or up. You want it to consolidate and then break out with momentum. All right. Thanks, man.
All right. Thank you very much.
All right. See you later.
Good one.
Okay. See you later.
All right. Thanks.